We have Nandan back with us. Nandan, we were just reading out your report where you see 2015 as a watershed year in terms of government policy and administrative steps. Exactly what are you expecting from the budget? What can fire up the markets, you think?
See, the first thing is I think people have to know that this is a regime which is stable. And therefore, some of the retro tax measures and so on. So those, I think that they should be given some comfort that things will not be arbitrary and people will not rake up the past. I think that is as far as the FIIs are concerned. As far as domestic policies are concerned, what's extremely important is that the fiscal maths is credible. Obviously, there is a little bump up of the GDP figures because of the base change of the base year in February. But apart from that, in general, the fiscal math should be credible because rating agencies, FIIs, even the RBI, in terms of its rate cut things, the next 25 bips cut is expected only after the budget. So I think that is the second thing. The third is a little bit difficult to enunciate because what I would really hope for is timelines on GST, but I think that's a little too early for that. But even otherwise, see what happened was last budget, there wasn't too much of a statement. So maybe rightly so. So this year, I think people would expect some sort of statements in terms of administration. We are aware that the government wants to keep administrative expectations low and actually show what they're doing rather than talk about what they're doing. I think that's a fairly good strategy. But something in terms of these steps, I think these are the three main things that I would look at from the budget. Okay,
Nandan, actually, even as you speak, a legend is running on our flash. The Nifty is back at 8,600. So the Nifty has gained substantial ground. What are you looking at in terms of Nifty gains, index gains in the current year, going by the pace of policy changes so far?
See, as I have said earlier also on this channel, I think Indian politics and Indian economics being good is sort of a necessary condition, but the main swing factor is always the globe. And this is sort of secondary. And, we come back to saying that even when our policies were not so good, there were a lot of flows and so on. So I think that sort of to an extent proves it. Okay. I think this world is going to be flush with liquidity because the US Fed is no more the marginal source of liquidity. So as long as the US grows and as long as, Europe and the Bank of Japan continue to spew liquidity, I think liquidity will not be a problem. So that's the first thing. On the other hand, India's greatest danger today is US dollar spiking. Now that US dollar spiking could happen for whatever reason. It may be due to some, oil, country, Venezuela or whatever, or, having an issue, or it could be for some European country having an issue for whatever reason. Or if US growth is not too good and therefore the world economic forecast still dip. So it could be for whatever reason, if US dollar spikes, it's going to hurt us badly. So I think that's the danger, which I don't foresee as of now, but these things happen. From what I can forecast, I can see that there will be abundant liquidity in the world, and therefore the world scenario should be good as far as India is concerned. Okay. Subject to the condition that I mentioned. Now coming back to India's what I would expect from the government is, 2014 was India's sweet spot. Whether you talk about politics, our honeymoon period, whether you talk about oil, whether you talk about the proximate geopolitics where, US troops were still in Afghanistan, so there was some amount of restraint and so on. Whatever way, I think it was a sweet spot, and therefore the turnaround that you saw in the economy was more on a YOY basis. Yeah. Right. 2015 you're not going to see any substantial improvement in the output parameters like capex or jobs and so on. You will have to wait for 2016 calendar year for that. Okay. If so, then what we expect 2015 to be is basically, one is the rate trajectory should not be jeopardized. The rate should continue to move down. Number two, as we mentioned, that the budget should be non-negative. Yep. And with fiscal maths being fine. Number three, is that the administration should continue, because the politics that you are seeing with Rajya Sabha not being allowed to function and neither saying yes or no makes it difficult till middle of 2016 to get something going in terms of the major reforms. But there's so much to be done in administration. There is so much capex and ground clearances that can be done in concert with the states.
Sure.
That I think this administration is the third point that we'll look at for.
Sure, Nandan, sorry to interrupt you, but if
finally,
you just
the fourth one.
We'll come to the fourth point in a bit, but before that, just to belabor a bit on the third point that you mentioned about the administrative steps that the government could take. How do you really capitalize on that with respect to individual sectors and themes? Do you continue to play the banks, the autos that did well in the year gone by, or do you change your sectoral bias now?
Sorry, I can't jump to sectors without completing point number 4 because it will be incomplete. Sorry.
Yep.
So I'll have to see. Number 4 is the oil bonanza.
Sure.
It's so important I can't go to sectors without
Sure.
that. So number 4 is how does both the government as well as corporate India actually use the oil bonanza. Because see what has happened so far is you've just got some part of inventory losses and so on, some part of the negative of oil. Some the real positives of oil you will see only this year onwards, from the current quarter onwards. So given these 4, I'll come to your question in terms of sectors. I think there's a difference between what will move up the most versus what will move the earliest. And usually people confuse between the two. So I'm making a distinction between the two. I think which will go up the most will be whatever is related to capex.
Okay.
So that could be, EPC plays, that could be, all sorts of capex plays, but that could take time, but that could give you the biggest delta. On the other hand, what would be the earliest to move, but may not give you as much delta, could be derivatives of that like banking and so on, for capex and for other reasons also, because consumption also has to go up. Number 2 is US growth plays. So IT, pharma, etc., whoever's dependent on the US. So I think the first one, which is basically about the capex plays, I think what is happening is there are, after L&T, there's just a few players, and many of them are highly leveraged and so on. So actually we've just released a report just today on the good EPC picks, and I think some of them could be multi-baggers. So that's the capex play, but you will take time to for them to flower. And the second is, as I mentioned, is financials, which are well known, both on the private side as well as the public side, and the US growth plays.
Okay, but one theme.
And yes, oil bonanza is the other one. Oil bonanza is something which needs to be played.
Sure. I'll just come to that oil bonanza theme in a bit, Nandan. Before that, one theme that is disappointed is the rural growth theme, because over there, wage growth has slowed down. We've seen it across companies, whether it's HUL, whether it's MMFSL, all are indicating that rural growth is slow. What do you do here?
Rural growth will be slow because, as I mentioned earlier, 2016 is the year when you will see any output parameters, whether it is job growth. See, what has happened today is those lucky few who could anyway buy a car or a scooter but who were postponing it due to sentiments bought in the last few months, saying it's happy times are here again, etc. But for what you need for an economy to grow is not the postponable purchases. What you need is basically, grassroots number of jobs to go up. Now, number of jobs to go up needs also capex to go up. So that's why I'm saying that will happen only in 2016. So till then, I think it will remain a bit weak. The second thing that's happened, which has not affected India so much, but generally, globally, food prices have crashed, which has been good for us in one sense. Food prices may go up next year because it's a soft commodity, but rural will take a little bit time to come up, probably 2016 calendar.
All right, let me latch on to that 4th theme. How do you play the oil theme?
See, oil theme, one part is whoever uses oil. So don't go directly on the oil companies. Just go on whoever uses oil. I mean, I'm not allowed to take names, but some of the users of oil and oil products have had inventory losses. So obviously some of them this quarter will be low and the stock price could go down and so on. Things like pipe companies, etc., etc. Whoever uses oil products, So a lot of that, there'll be a huge bonanza. And then also you'll have to see if their ability to take prices up or down, which actually depends on competition. Like, I mean, just to give you an example, for example, for tires, it's always asymmetrical in terms of rubber prices. So when, prices go up, they suffer. When prices go down, they can't benefit as much. On the other hand, let's say paint companies, it's not so asymmetrical. So like that, if you go through companies, you'll know which ones, gain from oil prices being low.
Okay.
Okay. I just had one question, on a point you made earlier about the fact that the market will be happy if the fiscal math is credible in this budget. Can you just elaborate a little bit on that? Because it looks difficult for this 4.1% target for this fiscal to be met. If that is not met, then will there be any disappointment, or will the market give it a pass if they see some, certain reforms or certain other initiatives?
See, this 4.1 also, fortunately, a little bit of it will be met because of this, base year change, where you revise every 5 years. So this February, the GDP numbers will have into a new series, so that a little bit of that will be helped by that. And even otherwise, administrative large, reforms are not really expecting the budget. Even I was a little bit cautious when I said I would expect a GST timeline. So I don't think people are expecting that. People are expecting the fiscal maths by itself to be credible. And fortunately, things like divestment and things like, telecom and all that will go through. So I think it shouldn't be too much of a problem for the fiscal maths, as long as, the finance minister is credible about it.
Okay. Where will the bigger beta come from in the mid-cap space, Nandan? I mean, logistics or digital companies, something on the fringe that has always given the sweetener. Where would you put your money?
As I mentioned, capex.
Okay.
It's clearly capex. That will give you the highest beta.
But it will give it, will it give it in 2015?
You have margins. Yeah. Because, PE always goes up before the EPS.
Okay.
And what happens for capex plays is that what you get both a sales and a margin kick.
Okay. Okay. And would cement also be included in that basket?
Cement, unlikely to give you a very high kick. Okay. Because cement, has been a safe proxy play to capex. So as I mentioned, it is something that you put it because they are well-governed companies, they are low debt, etc. But that would be something more like the safer type of plays. I don't think that will give you a high beta.
All right, Nandan, we'll let you go on that note. Thank you for giving us your views on the macros, on the micros, and on individual sectors that you're looking at. Thanks so much for joining us.